Hello everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Wednesday the 23rd of June. Now into today's session, there's been a slight air of a dollar pullback. We've seen that the move that we saw last week where the dollar strengthened in the wake of the Federal Reserve meeting has pulled back slightly. This move, however, has now brought markets into a key crossroads area. I'm going to look at a few charts today, which is going to show you that the rebound that we've seen, say for example on euro dollar, is now up to a key level where markets are now going to have to make a decision whether this is going to be a move that continues higher and the bulls continue to recover, or it continues along the dollar strengthening path. So this is a really important moment. Now this move yesterday was driven by some Fed speakers. We've got a lot of Fed speakers out this week, and we had Federal Reserve Chairman with a testimony yesterday, and he suggested, along with another Fed member, Loretta, Mester, that the focus needs to be on employment and the labour market, and that needs to improve to suggest that the Federal Reserve is on its tightening path, and that improvement is fairly slow at the moment. So the other focus that we've got today is on the flash PMI data. We've got the flash PMIs which are coming out for the Eurozone, UK and US, are all going to show the progress that these economies are making as we come through the summer months. So the markets will be certainly focusing on that as well. Now, with regards to the INFINOX support and resistance table, that is at the end of the video for some trading levels there. So on to the charts we're looking out for today. I'm looking at euro dollar initially. As I said, euro dollar has rallied into a key level of resistance now, 1950 to 20 big figure. So this is the question, can it continue? Also looking at the Aussie, a similar move. Aussie rebounded into a key level of resistance of overhead supply. Where to next for the Aussie? And also for gold. We've started to see a little bit of support, but can the bulls get a momentum going in a rally? So let's have a look at these charts. I'm moving on to the INFINOX MT5 platform now, and starting off with euro dollar. We can see that the euro dollar sell-off that we had last week has started to rebound slightly, and it's now back into this key level of resistance, 1950 to 20 big figure. Now, just zooming in slightly for the 4-hour chart, we can start to see the prospect of this being a little head and shoulders reversal. This is now better actually shown on the 1-hour chart, where you can see that move through the neckline, which is actually pulled back to the neckline around 119.20, and actually now started to build support again. So you can get an upside recovery target of 118.45 up to 19.20 gives you a target of around about 75 pips, which would suggest about there or thereabouts 120 big figure will come into play as a test. Now this is, as I said, key level of resistance because that is overhead supply. Look at that pivot at 120, well 119.90, but 120 big figure area. If you saw it above 120 big figure, that would be certainly clearing that move. But essentially at the moment this is just an unwind on the RSI, which went below 30. So you'd need to see this recovery, I think, through 20 big figure to really start to get more confident that this is a recovery play. However, as I said, that 1-hour chart gives you a bit of hope for that. Moving on to the Aussie, we can see again a rebound off the support around 74.80 area into this overhead supply of these old key lows back from earlier this year. Now this is between 75.35, 75.85, key levels of resistance now. And you can see on the 4-hour chart, again, a slight edge of or air of a base pattern, not as well defined as the euro dollar base pattern, but still you could argue a base pattern nonetheless. And it's an improving outlook with the move through the resistance and then coming back to find support around the neckline of the breakout. Now that gives you an implied target of around about 76 big figure. So again, that would be starting to move through this resistance. So again, crucial recovery. At the moment, it's not really got going on the daily chart, but we need to see that RSI back towards 50 and ideally above 50 now, because obviously for a serious recovery play, that needs to be above 50 on the RSI. And finally on the gold chart, again, is this a recovery? Well, remember those base patterns that we saw on euro dollar and the Aussie? Not really in play yet for the gold chart. We need to see it at least above 1790, and for a serious recovery pattern you need to see it above 1796. Now a little bit of a settling in the last few hours and last couple of days really, But again, the 4-hour chart needs to get back above the 50 mark at least to really suggest that this is a recovery play for gold. Otherwise, it's just essentially just a consolidation. But that support at 1760 is holding for now, building. But you need to get this through the 1797 up towards 1812 area really to get a recovery of any real note going. Thanks for watching this video. I hope you found it informative for your trading. Join me again on Monday where we'll be looking at how the progress of these recoveries are going and also looking ahead to US consumer confidence. So with that, I'll leave you with the INFINOX support and resistance table and I'll speak to you then. Thank you very much.